so now your business is starting to grow, but you're just frustrated trying to figure out how to run payroll. In this video, I'll show you how to run payroll successfully in Canada. Now, when it comes to running payroll in Canada, there are really three main components that you need to worry about. They are gross pay, net pay, and also payroll taxes. Each of these three components will determine how you pay your employees and also how you remit your government taxes to the CRA. So now let's take a closer look at each of these three main components, starting with gross pay. So gross pay is the sum of salaries, vacation pay, and stat pay. Salary is the amount that you pay to the employee per hour over a given period of time. Vacation pay is the amount that you pay out to the employee for time taken off. And stat pay is similar to vacation pay and is the amount that you pay out to the employees for public holidays. And then there's net pay. Net pay is the sum of money that the employee receives for working for your company. This is actually their paycheck. Before you get to net pay though, there are three things that you need to deduct from the gross pay. These three things are federal tax, CPP, and EI. These three deductions are taken out on behalf of the employee to pay for their income tax, their pension, and their employment insurance. On the 15th of the month, the employer is expected to remit these amounts to the CRA. This brings us to our next point, payroll taxes. So in addition to remitting the employee portion of taxes to the CRA, the employer also has to remit their portion of taxes to the CRA as well. This is only applicable for CPP and EI. Now, the amount of federal tax, CPP, and EI to remit to CRA is best handled using the CRA payroll calculator or payroll software. So in summary, as an employer, the employment tax that you have to remit to the CRA include federal tax, the employee portion of CPP, the employer portion of CPP, the employee portion of EI, and the employer portion of EI. Alright, so now that you understand the main components of payroll, let's do a recap of how the whole process works. So first, you calculate the gross pay for each employee. Next, you deduct the federal tax, CPP, and EI out of the gross pay. This results in the net pay. This is the paycheck that is given to the employee. Finally, take the federal tax, CPP, and EI that was deducted from the gross pay and add it to the employer portion of CPP and EI. The sum of this is remitted to the CRA on the 15th of the following month. And that's it. Now, this was a very brief overview of how to run your own payroll in Canada. And if you wanted to do it yourself, I recommend using the payroll deductions online calculator on the CRA website. It allows you to enter all your payroll information and it spits out the net pay and also the amount that you need to remit to CRA. It's very effective and recommend using it if you're doing payroll yourself. Alternatively, if you want to stay compliant with payroll and ensure that all your payroll needs are met, we can help. We work with an automated system called WagePoint, which allows us to onboard new and existing employees. The system also has a separate portal which allows employees to access their own pay stubs and also make any changes to their pay information. Best of all, WagePoint connects directly to your CRA account and allows you to remit payroll taxes automatically on your behalf. If you'd like to learn more about this system, please book a call with us at paperlessbooks.ca. Now, if you like this video and you'd like to learn more about how you can automate your business, don't forget to subscribe to our channel and please give this video a thumbs up. I'll see you in the next video.